Well, that's about trade setup. We gave you the market views as well as stocks you need to focus on. But let's get a quick global perspective. Dean Kim, Head of Global Research Product at William O'Neill and Company, joins us on the show. Hi, Dean. Good morning. Thanks so much for joining in. What are you making of the global equity markets as of now? As of last week at least, it seems you were ignoring all the bad news and only focusing on positives because global equities were running away. Do you think it's getting a little bit stretched on the upside and it calls for consolidation or maybe a pullback?
Yeah, it's a good point. I mean, if I look at the U.S. market, it has been going sideways for the past few weeks, but both S&P and NASDAQ, they're still hanging on to short-term moving averages. Fed's recent commentary of potentially raising another 50 basis points through 2 more rate hikes has certainly put a damper on the market that has rallied pretty hard in May and first half of June. So we're kind of going sideways at the moment. And so we're paying close attention to the market action to see if the indices can hold at the 10 or 21-day moving averages. We currently have both S&P and the NASDAQ in confirmed uptrend, but we may move to under pressure if they do break down below the 21-day moving average. So I think the next few trading sessions is going to be critical, especially on the back of the CPI number that's due out on Wednesday. So we have seen a steady decline in CPI in recent months. So if this trend continues, then the market has a chance to hold above key moving averages. However, if CPI comes in hotter than expected, then the market will have to yield to Fed's continued rate hike plans. Now, but the good news is the breadth has been improving. With over 50% of the New York Stock Exchange stocks trading above the 150-day moving average. However, we are about to embark on an earnings season with banks reporting starting on Friday. So we'll see what the commentaries are. But I mean, it's good that the market is holding above short-term moving averages. But I think CPI is going to be a critical data coming up on Wednesday.
Sure. Dean, hi, good morning. It's been a pretty impressive year, right? I mean, if you look at the NASDAQ, it's up over 30% this year, so it's done a lot of the good work. Do you see more upsides on the charts? And if not, is this a year where the U.S. markets could spend the rest of it in consolidation?
Well, I think, we will take one data at a time. Wednesday, we'll have to see what the CPI does. On one hand, you have the Fed wanting to raise rates because of high employment numbers. But on the other hand, CPI has been telling us inflation is coming down and quite dramatically. So it's a classic case of Fed continuing to be behind the curve, and the market's going to have to struggle with that. So if we do get some good, cool CPI numbers, I think market has a chance to continue to rally. And we're looking at, for example, 4,500 as sort of resistance level at the S&P. We're currently sitting right at the 10-day moving average. And the next support is at the 21-day moving average, which is 1% away. But we are keeping an eye on 4,500 as a target through the summer and towards the year end. Undoubtedly, we're going to see some ebbs and flows in the market. But I think general trend is we're going to continue to rise higher throughout the year.
Okay, so if the CPI inflation cools off more than what the street is anticipating, you see the S&P 500 heading to levels of 4,500. Currently, it's at 4,409. What about the Nifty? It's trading above all its averages, considering we're at all-time high levels and nearly there. Any signs of cooling off? Any signs that markets are going to be spending time at levels of 19,000 plus instead of climbing higher? Or are you getting signs of falterish? Markets will falter from here.
Well, it's pretty interesting because India is the only market in Asia that continues to be in confirmed uptrend. Every other major markets like China, Hong Kong, South Korea, Taiwan, Japan, they're all under pressure. I think those countries, they're sort of taking the cues of the U.S. market and seeing what the Fed is going to do. because, you know, as you raise rates, you're going to cut off demand, and these Asian countries, they are the source of supply of goods and services. So it kind of makes sense that these indices are sort of taking the cues from the U.S. India, however, is completely different because I find the India economy very robust. You have the massive middle class that's coming up in terms of income as well as spending. So it's quite a different dynamic, and India continues to do well. It is a bit extended. It's cooling off a bit at the moment, but I think in terms of the next resistance level, you're looking at the recent highs from a couple of weeks ago. But as long as the market stays above short-term moving averages, I would say it's still constructive.
All right, Dean, final question before we let you go. There is talk that could be a big stimulus coming in from China, which could bode well for metals. But will that be good enough news for the Chinese economy? Because clearly that unlocked trade didn't really play out for those that were very bullish on China. Would you change your stance in case there is a big booster shot that comes in from China?
Well, I think everybody's waiting for China stimulus. They have been they've been holding back on stimulus program. But once they start to come out with some stimulus, I think that's going to drive the rest of the Asian markets and India as well. But right now, it seems like the markets are pricing in sort of China government not doing anything for now. But once that news comes out, I think we're going to see a rally in those markets.
All right. You do track a lot of stocks in the Indian markets as well. So I'm just going to throw a couple of them at you. You're free to give us your view or not. Names like Reliance, of course, have done very well. Stocks like Tata Motors are sitting at all-time highs. Do you see incremental upsides in any of these names?
Well, I think Reliance Industries is a perfect setup. It just broke out from an early stage base. Looks like it had a powerful day a day before. So I would say Reliance looks really good. Tata Motor, it's been doing fantastically well, but it is a bit extended. So if you hold the name, I would continue to hold it, but maybe not start a fresh position here. Maybe look for a pullback. There are other names within auto space like Maruti Suzuki that's just breaking out from a early stage base. So that one looks pretty attractive.
Dean, we'll leave it there. Thank you very much for joining in. Nigel, since you brought up that subject about fiscal stimulus in China, yesterday I was reading that economists are talking about the risk that China may face Japanification, which basically means that China today is similar to where Japan was 3 decades ago. A bubbly real estate, very high levels of debt. All of them are now collectively, individuals and companies are looking to pay down their debt rather than, take on fresh debt, even though interest rates are low, and invest in the market. So what happened in Japan, as we know, is a very long period of sluggish growth. So economists are saying that there's one, Richard Koo. He's also written a book about balance sheet recession, as it's called. And he's saying that there is a risk that China may face Japanification, go down the Japan road, unless they announce a fiscal stimulus. So, they say that China may learn from the mistakes of what Japan did, right? Japan didn't announce a fiscal stimulus, and you know what happened. They went through a very long period of weak growth. So, economists are betting that China will have to announce that fiscal stimulus. It's not come yet, but, economists are, hoping for that to avoid China going down the Japan road.
A valid input, Rima, but going whatever that economists had to say will be very, very important. But our metal index is suggesting that it's definitely coming.
Yeah.
And today there could be some follow through because of the high expectations out there and a weaker dollar index as well. So good input, but I think a stimulus.
No, the economists are saying that China needs to do the fiscal stimulus. It has to come if they don't want to go down that road. So they are betting on that stimulus, and which, as you said, the market is also pricing in.
All right. Well, time to slip into a short break. You come back, we'll focus on all the stocks that were lined up for you. We'll tell you more about why the stocks aren't focused. Don't go anywhere.